Hello there and welcome to the look ahead for Thursday, the 29th of February with me, Fiona Cincotta, Senior Market Analyst at City Index. So here we go, quick look to what we'll be watching. Overnight, we've got from Japan retail sales and also industrial production. Retail sales previously fell 0.7% month on month. So investors will be looking to see whether that trend continues. Industrial production is expected to drop 7.5% month on month. The data is going to be interesting. It comes at a time when we know Japan has slipped into recession at the end of last year, but also as the Bank of Japan is looking to start raising interest rates or to move out of negative rates at least in the coming months. Also, we've got German retail sales and also German inflation. That's going to be a big focus tomorrow. It comes ahead of Friday's Eurozone inflation. Expectations are for CPI to cool further in Germany, the Eurozone's largest economy, to 2.6% down from 2.9%. And then, of course, there is the US core PCE. Now, this is the big focus. It's been the main focus across the week, really. The markets have been waiting to see whether the Federal Reserve's preferred gauge for inflation will cool further to 2.8% is expected, down from 2.9%. Also, we'll get some clues over jobless claims and the health of the US labor market, which has proved to be pretty resilient, and we're expecting to see those jobless claims hold steady at 210k. Now, just whilst we consider what we're going to be watching tomorrow, let's have a look here at the DAX. This is obviously going to be in focus because of those retail sales, also because of the inflation data. But, even though we've seen concerns, I guess, over the health of the German economy. We've had the German government slash its GDP forecast for this year to 0.2%, down from 1.3%. The equity market, the DAX, has surged higher to record highs, hit fresh all-time highs this week. And I mean, that's basically because, we've got sort of, part of that AI optimism, which has helped fuel a rally across the board, but also we're finding that the DAX is being boosted by those expectations that the ECB's next move is going to be a rate cut. And I guess if we see that cooler than expected inflation, then that's going to fuel those bets that the ECB could start cutting rates soon, which is going to help or could potentially help the DAX higher. But it's worth watching. Just have a look on this chart here. We can see the RSI is tipping into overbought territory. So actually, the DAX may struggle to push much higher from these record levels. We might see a period of consolidation or at least a pull back. As far as levels to be watching, buyers are going to be looking for that 18,000. Sellers will be looking at around 17,370. That's where we've got the weekly low. Below that, you've got 17,000, the round number, and the previous high that we'll be watching for. Next one to be watching is Euro US dollar, obviously, as we've got that German inflation data and also core PCE. Interestingly, the dollar has been weakening over the past couple of weeks, and we can see that here on the chart. We've seen safe haven outflows after those upbeat Nvidia results, and even though we had strong US economic data results coming through and jobless claims last week were particularly strong, we also had Federal Reserve officials continuing to push back on early interest rate cuts. Even so, the US dollar did just trend lower, and that helped the Euro US dollar recover from that 107 level. It's pushed out above the falling channel, which it's been trading in since the start of the year. But we have seen that it's really struggling to push meaningfully above the 200 SMA. That's where we've got this level that it's been consolidating Euro US dollar over recent sessions. It's around the 108.25 level. It's just above that right now. buyers are going to be looking to get a sustained move above that in order to test 108.65. That's the weekly high, and above that we get 109 and 110 coming into focus. But on the downside, we've got that 108. That was today's low. If sellers can get a break below there, that's going to create a lower low, and it brings that 107 level into focus. Again, it could be a pretty volatile day tomorrow, as we've got that inflation data from both sides of the Atlantic. If we do see signs that the Eurozone or German inflation is hotter than expected, then that obviously could help Euro push higher. But given the weakness that we've seen in the German economy recently, that may not necessarily be the case. Just finally, one to be watching will be the US dollar, Japanese yen. Obviously, we've got the overnight data. We've got the market has reined in perhaps those expectations of the Bank of Japan hiking interest rates. And that's what sort of saw the Japanese yen struggle across the first couple of months of the year. However, we did have that Japanese inflation data come in earlier this week, which was actually hotter than expected, and that's fueled those bets once again that the Bank of Japan may start to move away from negative rates soon. Although we do have Japan in a recession as well. We know that at the end of last year. So, there are quite a few factors which the central bank will be weighing up there. Then you've also got this US dollar expectations that the Federal Reserve is not going to start cutting interest rates probably until June. And that has been pushed back. Also, the amount of rate cuts that we're expecting by the Federal Reserve has been reined in to around 80 basis points worth of cuts in 2024, down quite considerably from around 133 just over a month ago. So that sort of the reassessment of the central bank expectations is what's helped drive this pair higher. It's testing, buyers are looking to test that 150.90 level, which is the February high. If we get a move above that, then we'll be looking to test the 151.90, which was the multi-decade high hit at the end of last year. On the downside, be looking some immediate support around the 149.50 level, which is the mid-February low. And if we get a move below there, then we'll be looking at 148.80, which is the mid-January high. I hope you like what you've seen. If you do, then please do press the like button. And if you would like to receive more videos like this, then please do subscribe. Thank you.